Well, today I'm going to share with you guys the top 10 stocks that I want to buy with the stock market continuing to go down. And we're going to talk a little bit about each of these 10 stocks. Some of these stocks I already own and I want to build the positions bigger. Some of these stocks I do not own yet, but I absolutely want to own them very, very soon with the stock market continuing to be volatile, the stock market continuing to go down. I hope you guys enjoy a video like this. If you are excited about this video, make sure you smash the thumbs up button. It lets me know that you guys actually enjoy a video like this where I talk about some stocks that I'm looking to buy out there, okay? Now, I think we got to cover something very, very important before we even get into these 10 stocks. Obviously, the markets are downtrending. Obviously, we're in a stock market correction now. Like 20% the stock market has gone down in like a snap of fingers. We all know why this is. It's a Rona situation. It's completely weakened the market. It's possibly going to put us into a recession, and that's just what it is. Literally, the Dow here today hit its 52-week low, okay? 52-week low. And something I think is very important, I just got to bring up because I know there's those people out there that are like, oh, you guys, and you know, buying stocks when the market's going down. Look at how dumb you look. Oh my gosh, the market's down again today. And I know that's the popular thing to do whenever the market's downtrending, and to throw value investing to the side, to throw investing in general to the side and say, you know what, wait for the bottom. Wait for the bottom. That's when you need to worry about buying stocks, not right now, okay? And you know what I'm going to say? You don't know where the bottom is. I sure as hell don't know where the bottom is. Warren Buffett doesn't know where the bottom is. The Oracle of Omaha doesn't know where the bottom is. He's been in this market for like, you know, since like, I don't know, like 1742, okay? No one knows where the bottom in the stock market is, and that's just facts. So if you think you're going to try to time it out, good luck to you. That's all I'm going to say, okay? If we go back to 2008, 2009, huge recession, right? We go back and look at it, okay? The market topped, it peaked in 2007. The Dow hit about 14,000. Now, by the time March 2009 rolled around, the Dow was right around 7,000, a little under 7,000. It had fallen like 50%, the Dow had. Something very important to keep in mind is you could have thought the bottom was many times before that, okay? And you could have thought even in the March of 2009 that still wasn't the bottom. And guess what ended up happening? The stock market started to go up and up and up and up. And guess what continued to happen? The economic data continued to get weaker and weaker. Okay, when basically the market bottomed, unemployment rates in the United States of America was like 8.3%, 8.7%. It was continuing to climb. And in terms of the unemployment rate, it didn't peak until October of 2009. Meanwhile, the market had already been going up as the economic data continued to come in weaker and weaker and weaker. And guess what? The market went up and up and up. It wasn't until October and November of 2011 that the unemployment rate in the United States of America got down to where it was when the market bottomed, okay? So you could have thought, oh man, the market's going to get a lot weaker. We haven't bottomed yet. This is just a short-term, you know, rally in the stock market. We're going to fall right back down because things are just getting worse and worse. And that's where a lot of people just miss the ball. They think they can time it out perfectly, and even in the 2008-2009 recession, people completely missed it. They completely missed catching the bottom, and the stock market started to go up and up and up while the data was still bad. I mean, heck, by 2011, the stock market had almost doubled up. The stock market was like 12,000, approaching 13,000 in terms of the Dow. Remember, it bottomed at about 7,000, a little below 7,000. So it nearly doubled up in that amount of time, while the economic data in the rest of 2009, 2010, and even part of 2011 was just bad. The market had already just gone up, and people that just didn't want to buy, they missed out on basically about a 2x of the market in literally just a couple year span, because they were thinking, well, things are getting worse, the data's getting worse, so you know what, we're just going to wait, maybe the bottom's coming. So, you know, and countless stocks had flown up 2x, 3x, 4x, 5x their stock price. I mean, if you get the market to do a double up or almost a double up in a matter of 2 years, you're going to see countless stocks up 3x, 4x, 5x, 6x. I mean, we can go back and you can look at stock charts of a ton of companies that were public back then, and you're going to see a countless amount of stocks that had just flown up, okay? And this point I try to bring up to everybody in my Discord chat today. I recorded everybody a video, basically a little short video, just explaining that this is what happens in the stock market. People try to catch the bottom, and other people just get flown out, and they think the stock market, is just, not the place to invest and things like that. And this always happens. This is just what happens. This happened in 2008, 2009. People got thrown out of the market. They didn't realize it was the best opportunity to get in the market. They just looked at it as they wanted to be scared of the market. They didn't want any piece of the market. Well, the market's going down. Oh, somebody lost money from it, blah, blah, blah. And meanwhile, the whole opportunity is buying when the market's really, really weak. That's when you're going to get your biggest gains long term. As somebody that has an long-term outlook, that's when you're always going to get your biggest gains, not when the stock market's peaking, not when it's having the best time ever. Just like, it's just facts, guys. Like, just go throughout history. Go to the last 100 years, not just like modern history. Go for the past 100 years, and you're going to see every time when the market was dipping huge, when there was a ton of negativity, it was a massive buying opportunity. There was massive amounts of money to be made. And that's just the bottom line there, guys. And that's something I try to explain to everybody in my private group. By the way, for those of you guys that have been wanting to get part of that Discord chat and wanting to take advantage of my private group, the course curriculum, and learn from me directly, someone that's been in the market for over a decade now, if you want to go ahead and take advantage, we have a huge sale coming up March 15th through March 17th for you guys. That'll be the pinned comment down there if you want to get shot that deal as soon as it comes out. It's going to be on an annual membership to the group, okay? And one last thing I want to cover before we cover these 10 stocks is some people are asking, I'm seeing some questions out there, should I get on margin? Should I invest on margin, essentially? Take out debt to basically, buy extra stocks, because, definitely some of these stocks are at extremely attractive values already with how much the stock market has fallen. And I would say absolutely not. Absolutely not. Stay away from margin regardless, because we don't know how long this dip in the market, it will be short term. We know that, but we don't know if it's going to be 6 months, 12 months, 18 months. It could be quite a while. And meanwhile, the market could go down a lot more. Like things, a lot of stocks are getting priced as like silly prices already. But just because a lot of stocks are already at silly prices doesn't mean they can't get sillier, okay? They could absolutely go down more. And meanwhile, you got to pay interest. And if you go too heavy on margin, you get margin calls. So in my opinion, stay away from margin just because we don't know where the bottom is in this. What if the Dow goes down to 20,000? Would you get margin calls? What if it went down to 18,000? What if we had a 50%, peak to trough situation? The Dow fell to like 15,000, 14,000 range, kind of like we had in the massive 2008, 2009, financial crisis situation. What if that happened? That's why I say stay away from margin. This is why you always want to keep cash around for these type of opportunities, guys, okay? So let's start getting into these 10 stocks now that we had that pep talk, and I hope you got a lot of value out of that. Smash the thumbs up button if you got a lot of value out of that. I hope you did, okay? Number one stock out of the 10, by the way, these aren't in order of like these are the best stocks, the worst stocks, or something like that, but the first stock up here is Foot Locker. Ticker symbol on this one, FL. Foot Locker, we all know their business model. At the end of the day, they sell shoes and clothing items and things like that. And this is a company that's valuation has gotten extremely, extremely attractive. $2.6 billion market cap on this company for the entire company now. A company that owns a ton of very, very successful brands, not outside of just, Foot Locker, okay? A super profitable business model in any type of normal economic activity moment, okay? Right now, obviously, with the Rona situation, it's gonna hurt the business short term. No doubt about that, just as pretty much every company is gonna be hurt in the short term. But the fact is, any type of normal economic environment, this company throws off cash, extremely profitable business model, and whenever things return to normal, they should be a profit machine in the future. And I'm getting this company for dirt cheap prices right now, which I absolutely love. And also, by the way, great balance sheet on that company, like $700 million in cash and only like $100 million in long-term debt. So they have literally like a 7-to-1 ratio of cash versus debts, which is absolutely phenomenal for a company like that. When you're thinking about, how long does this last? Does this hurt companies just for the next few quarters? Does it hurt companies for the next year? Regardless, a company like Foot Locker should be able to make it through very easily to the other side because they're a great balance sheet, and great balance sheets are at a premium, basically, whenever you have some weakness in the market like we have right now, okay? That's stock number 1 of 10. Stock number 2 of 10 is Revolve Company. Ticker symbol on this one is RVLV. This is an online retailer of clothing items. Average customer spend on this website is nearly $300. Another business model that absolutely will be hurt short term. Company with no debt, has a good amount of cash on the balance sheet, I think around 50 million or so. Company that is profitable, which I think is very, very important. Great management team over there. They understand how to use influencers, and obviously if business is hurt short term, they'll be able to negotiate much lower rates with a lot of the IG influencers that they use and different influencers on the different social platforms and whatnot. They'll be able to bring down rates and still be able to get a lot of publicity. And so needless to say, great business model, very good company on the come up right now, profitable business, good balance sheet. I love that one overall, and it's definitely, I look at that one as maybe like a Nordstrom of the future. What Nordstrom kind of has represented over the past several decades. I think something like a Revolve has that type of opportunity long-term in the online space, okay? That's why stock number 2. Stock number 3 up here is good old Facebook, okay? Ticker symbol on this one is FB. Anytime the market capitalization on this company gets under $500 billion, it's basically like stealing money from any type of long-term perspective. If you got a 5-year perspective on the stock, in my opinion, it's arguably the easiest money you can possibly make in the stock market. That's my personal opinion. No, I know everybody's opinion is different, but if I look at Facebook, I mean, this is just a profit machine company. They own, the services that everybody's on, whether it's talking about messaging services or obviously the socials. They're the biggest player by far and away, and there's really no one close to them. Ad rates will continue to go up. Advertisers, as we're going to have this Rona situation, guess what happens? Advertisers have less advertising money to spend. So if you have less advertising money to spend, then you have to look at Facebook, because flat out Facebook and IG and the platforms they own, you're going to get more bang for your buck than you're going to get anywhere else, okay? So the fact is, the more and more customers are going to continue to come to the FB as things get rougher and rougher. This is just how it works. It's not just my opinion, okay? Gary Vaynerchuk has been saying this for years. Basically, everybody's going to have to get a lot smarter, because advertising dollars are going to go from, let's say this company had $500 million to use, all of a sudden they got $100 million. And when you got $100 million to play with, you have to use that as smart as possible. You can't just spread it all over the place like a lot of these guys are doing. Let's do television, let's do radio, and let's do a little bit of social and whatnot. No, you got to do it the smartest way, and then flat out. You ask anybody in the advertising world, you get the biggest bang for your buck on the socials. It's just flat out, because they know everything about everybody. It's just you're not going to spend anywhere better than Facebook and IG. Okay, super profitable business model. Balance sheet, like literally one of the top 5 balance sheets in the world. Cash loaded to the sky. We're talking tens of billions of dollars of cash just sitting around. And the type of business model that even if it was a recession scenario, will still be able to throw off billions upon billions of dollars in profits. Okay, it's just an amazing business model. Anytime I can get it for under $500 billion, I'm stealing money from a long-term perspective. All right. Next one up here is probably the biggest 5G. It is the biggest 5G play in my opinion in the world. The biggest direct play on 5G is Qualcomm. Ticker symbol this one is QCOM, QCOM. Okay, let's just call it that. Good old Qualcomm. This one is starting to get very intriguing to me. It's not one I have bought yet, but I'm very, very interested in buying this one. Market capitalization of $85.5 billion, very profitable business model. And at the end of the day, it's the most direct play, in my opinion, on 5G. 5G will be something that starts to take off this year, but will really start to take off in a major way in 2021. Like 5G is just a huge game changer out there. Qualcomm's the biggest direct play on it. I think the company is starting to get very, very cheap when you look at the type of growth Qualcomm should be able to have with 5G starting to take off this year and into next year. And it's something they should benefit from for years and years to come in the future there with Qualcomm. So that's why it's stock number 4 or 5. It's just the best direct play on 5G out there. My other 5G stock is obviously Skyworks Solutions, obviously another great company, but Qualcomm's even a more direct pure play on 5G in my personal opinion. Okay, that's why it's stock number 4 of 10. The 5th stock up here of these 10 stocks is good old Oobity Booba stock. Okay, good old Oobity Booba stock. This one has gotten nailed with the rest of the market, obviously with the Rona situation. If you look at Uber's business model, the majority of their revenue and profits the markets that are profitable for the company come from really big cities. And if we think about the Rona situation, it's a very big negative for Uber in the short term. A very big negative, because all these big cities are obviously they're kind of being shut down right now. They're just being shut down. Not nearly as many people are going to be taking rides. Probably not as many people are going to be getting Uber Eats in the short term. So short term, Uber's absolutely a business model that's going to be very negatively affected by this whole Rona situation, which is why the stock has gotten absolutely nailed recently. And now it's trading at $26 when it was bounced back very strong the last 6 months or so. It was at $26, $27 just a few months ago, and it had bounced and bounced and bounced, and it was coming back to life, and it was like over $40, and then the Rona hit it. Okay, and now it's $26 6 again. I love this company anytime it's under a $50 billion market cap. Anytime it's under a $50 billion market cap, I absolutely love this one. I think this one has potential to be a $150 billion market cap long term. So, you know, needless to say, anytime I can get it under 50 billion is very, very attractive to me. And so Oobity Booba stock, absolutely one I'm interested in adding more of, okay? Planet 13 Holdings, ticker symbol on this one is PLNHF. This is by far and away the smallest market cap of any company that's going to be listed on these top 10 stocks. But Planet 13 plays in the Michael Jackson space. Okay, you know Michael Jackson, he's dancing around, and no, I'm not talking about that Michael Jackson. I'm talking about that other Michael Jackson. If you don't know what I'm up on, then, you know, I don't know if you know this one, okay? Planet 13, market capitalization under 200 billion. They have their massive store here in Las Vegas. They have another future store coming just outside of Los Angeles. And so needless to say, Planet 13 should be able to, you know, continue to expand locations, continue to make big profits short term. None of the business model is going to be very hit short term. Their store in Las Vegas, you know, gets a lot of tourist money in there. And obviously with travel slowing down, Las Vegas is going to slow down. Like, you know, short term, it's absolutely a negative. Anytime this company's under a $200 million market cap gets very interesting to me. And if it can drop under a $150 million market cap, that it gets very, very, very interesting to me. It remains to be seen if that happens. But if it happens, you know, I will gladly be buying that one in a major way. Okay. And you can just kind of tell a trend. I love to buy some of the most beaten down stocks that are beaten down in short term, because long term, some of these companies have some incredible upside. Okay. Winning Resorts. This is another play similar to obviously you know, Planet 13 in terms of, you know, Las Vegas properties. Obviously, they're playing in the gaming space. Macau. This is a company getting destroyed short term. Like, there's no other way around it. I mean, if you're thinking about, other than maybe the cruise stocks, the gaming stocks are probably the next ones to get hit the hardest here in the short term. And Winning Resorts is not winning right now. It is losing resorts. That's why the stock has fallen to $80 a share. Anytime this market cap gets under 10 billion, I'm stealing money long term. I'm just stealing money long term. Anytime it gets under $10 billion, in my opinion, that valuation is just way, way too attractive on a long-term basis. Like, at the end of the day, Macau's a phenomenal market. Las Vegas is a phenomenal market. Yes, they get hit, you know, very hard in a recession scenario. And obviously, you know, when people aren't traveling like they are right now, they absolutely get hurt. Their business absolutely gets nailed. But at the end of the day, these are great. It's just a great business long term. They play at the high end of the market. VIPs love to play there. Rich people love to play there. Like, well, like, what are you gonna say? Like, at the end of the day, like, people want to go to Macau. People want to go to Vegas. Maybe they're not going to go for the next, you know, few quarters or whatever, but they will go eventually, because people only have a limited amount of time on Earth, and they don't want to just stop their life forever. So eventually, those properties will be doing great again. And needless to say, anytime that one gets under a $10 billion market cap, it gets very, very attractive. So that is why that one is stock number 7 of 10 I am buying. By the way, Wynn Resorts, they got over $2 billion in cash. So whatever happens, recession, they should be able to ride it out very easily. Steve Wynn put, you know, with that company in a position a long time ago to always have a lot of cash around. Always have a lot of cash around. He built that into the company. That way, this is a company that can prosper the most, usually, when things get a lot better. Whereas a lot of other players, they keep their cash levels really low. They have huge debts. Wynn loves to keep a lot of cash around. And, you know, we're talking $2.3 billion in cash they had around latest quarter, if I recall. The market cap on this company is $8.6 billion. So they like to keep a lot of cash, needless to say, okay? Number 8 stock of these 10 is a stock that I'm buying the least of, not because I necessarily believe in it the least, but just because I already bought a lot of shares over the past month, and I can only add a little bit more of this one. And it's another travel industry related play, kind of like a Wynn Resorts. These ones are getting hit the worst right now. CCL, Carnival Corporation. It's a company that now has a market capitalization of $15 billion. Very, very low. You know, it's just a business model that is extremely profitable in any type of normal environment. Like short term, it's negative. It's just bad short term. There's going to be no other way to describe it other than that. But the flat out honest truth is, this is a business model in any type of normal economic environment, which in most years, what type of economic environment do we have? A normal economic environment, right? Most years are not like crazy growth, and most years are not recessions. Like, this is just facts. So Carnival's going to get hit very bad in the short term. Their numbers are going to get hit very bad in the short term. But at the end of the day, this is an extremely profitable business model, and I believe it will be a business model that comes back. The question is it 2021 where this business model comes back in a strong way, or is it 2022? That remains to be seen, but needless to say, it's a very intriguing value proposition from a long-term basis, in my personal opinion, okay? okay? Now, these last two stocks I'm going to mention here, stock number 9 and stock number 10, these two stocks are getting very, very close to me buying these two stocks, but I'm not quite there on these two stocks, but they're dang close, okay? Dang. They used to be a Chinese company I think I was invested in back in the day. Dang, it was like Chinese e-commerce. Okay, I'm off topic, okay? Stock number 9 of 10 is Google McDougal stock, okay? Alphabet, okay? This one is getting very, very close to me buying it. I'm looking for this one under a market capitalization of $800 billion. If it gets under $800 billion and it gets into the 700s, I will start buying this one, good old Google McDougal. This is stock number 9 of 10 because, I mean, it's Google. Like you know, the Google owns Google. Google owns YouTube. Google owns Android. Google owns the world. I mean, it's Google, okay? It's an amazing company. Alphabet's an amazing company, extremely profitable, arguably the best balance sheet of any public company in the entire world. Arguably the best balance sheet. I mean, the amount of, if I recall, last time I checked, I think they had over $100 billion in cash sitting around, or somewhere around there roughly. Like, it's disgusting. Their balance sheet is on a whole other level. Facebook has a top 5 balance sheet in the world. Google, arguably the best balance sheet in the entire world. Like, it's absolutely amazing. You know, you can make an argument that Apple might be up there or something like that, but my goodness, guys, you know, talk about a super profitable business model, and talk about a great balance sheet company, and talk about a company that just knows how to make profits and knows how to have products that are game-changing products and are super important to the world. That is Google at the end of the day, and that's why it comes in at stock number 9 of 10. And in terms of stock number 10 of 10 that I'm very, very close to buying, but I'm not quite there, very, very close though, is Texas Roadhouse. Ticker symbol on this one, TXRH, okay? This one is a restaurant play. Their restaurants are super packed all the time. Maybe not in this Rona situation, but in most times, very, very packed. I mean, like, literally you can go to a lot of the Roadhouse locations and you wait for like an hour to 2 to get a table on, like, you know, at 6 o'clock or whatever. Like, it's absolutely insane. This is a company, look at today. Today they took a 15% hit. Obviously, if everybody's scared of the Rona situation, they're not going to be going out to eat short term, but long term, it's a great business model. The company very successfully run, and the valuation has come down so much on this one. You know, if it goes to about $2.7 billion market cap or under, I will gladly buy this one. Great balance sheet on this one. I believe they have over $100 million in cash sitting around and no long-term debt. Very profitable business model in any type of normal economic environment. So I hope you guys enjoyed today's video. As always, those are the top 10 stocks that I'm looking to buy as the stock market continues to go down. You know, the best time to get involved with the stock market is at the end of the day when the stock market's going down and when everything looks bad. The worst time is when everything looks perfect and everybody's euphoric. So hope you guys enjoy this. As always, by the way, if you're looking to get in my private group, we're going to have that huge sale coming up. Go ahead and check out the pinned comment down there if you want to get shot the email basically with the deal as soon as it drops on March 15th, or you get on the messenger list, whatever you want to do down there. Okay, that'll be the pinned comment. Thank you for watching and have a great day.